Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed and my website, gregschnell.com. Lots going on this week with a little bit of a spike in oil since we last talked. And we got ourselves some issues starting to show up. So oil, a week after the strike, we want to cover that off a little bit and talk directly to it. And we want to talk about renewables. The solar stuff seems to be, as the price of oil rises, then that helps the economic viability of renewables. And so they all started to pop as well. What I'm uncomfortable about this week, what's keeping me up or keeping me focused? So we're going to go through those charts. Anyway, let's get into it because there's a little bit more to the story that we need to talk about. I do want to show you one thing. I went out to visit Ralph Akampura on Tuesday at his barn in Minnesota. And Ralph has painted the Dow Jones Industrial Average on the side of the barn. And all these green sticky notes are something significant that had happened. These banners here, the years that which president, and so he goes all the way around his barn, starting way back in the 1800s with the Cowles Index. Anyway, it's a fascinating presentation by Ralph, kind of a live living history walking through the New York Stock Exchange or the stock market over time. Anyway, it was a wonderful experience, and I think StockCharts has David Keller out there next month. So he's going to present the Minnesota chapter at the CMTA Association, and with that, he'll also be visiting Ralph's barn, and so StockCharts should have a little bit more video for you on that. But there was lots of great stuff there, so I just wanted to share that. Another thing that's going on is I'm at the Toronto Money Show this weekend, so I'm here in Toronto today, and then I'll be speaking at the Money Show tomorrow. So if you get the chance, come and hear what I have to say. That'd be great. So we look forward to talking about it. Thanks. Okay, let's go to Safari. Over to the homepage. This is my homepage. I use the Ticker Cloud for my homepage. But the one thing that I think we want to talk about a little bit here is these oil stocks kind of spiked on the news and have pulled back. And now we're sitting here just kind of at this breakout resistance. I'm just showing Gush, which is a 3 times oil ETF. And spent a lot of time just trying to get more information on what's actually going on in Saudi. So we had 2 sites, one with 1.5 million barrels, the other one with 7 million barrels a day. And so the 7 million barrels a day is kind of a main distribution hub. It sounds like it's, I've never been to the Middle East. So it sounds like it's a lot like Cushing, Oklahoma, where lots of things from Saudi go through there to get out. And so part of that facility was knocked offline, not all of it. And the Saudis have some oil reserves. The US has oil reserves. China has oil reserves. And so we seem to have enough oil in the short term to kind of cover the initial blow. I think probably what happens next is we're going to end up with more geopolitical tension as we go forward. So this is an important place to watch. As you can see here, if we're going to start rolling back over in momentum right away here, that would be a problem. The other way to look at it is we start to turn and thrust higher. So what I want to spend a little bit of time talking about, we had started to get long oil right down here on this August 25th low. And if you've been listening to the videos over the last couple of weeks, that was one of the ways I was playing it. Now, not all companies have pulled back like this. A few have. But I have a whole tab here that I want to go through about oil and gas exploration. And the way I've structured these stocks is just in order of best price action first. And here, you know, we saw a surge 3 weeks ago on this Russian company, surge whatever, on this Russian company. And you see that it was breaking out to new 3 or 4 year highs here. And it had the surge actually before this explosion, no real volume showing up, but then it's held in there. And now if we go down here to some of these, this is Crescent Point Energy in Canada, and they work on both sides of the Canada-US border. They have properties in the Bakken. And you can see this one has made new 52-week highs, or very close to new 52-week highs. I think it's probably 11-month highs. But it's starting to break out, and it's also broken this long downtrend in momentum. And this breakout was underway for the last 2 weeks, and even this week it's held up, even while we've had the price of oil pull back. So it's back near the top of the range, and I think that's pretty good. And look at the volume that's been piling into this stock. So there's some people, that, as I like to say, this isn't your grandma buying a new stock. This is institutions starting to hit the gas pedal here with. This is the U.S. listing of this company. It's also listed in Canada, but you can see, these are our big price bars here. We've had, or volume bars, we've had 55 million shares purchased in the last 3 weeks, or change hands in the last 3 weeks. And that's pretty solid coming off this low. And we also had a much higher low in momentum. So I don't think this move is over. I think we're just getting started on some of these stocks. And as we go through here, just want to show you some of these names. So here's Comstock Resources. This is a small cap. So it didn't have a scooter ranking, just got one. And now that the market cap's up high enough, and you can see it surged up to $10 here. And that is a new 52-week high. And as it broke through, it's trying to get going. So these stocks were starting to improve for the last couple of weeks anyway. And then this spike in oil helped them a little bit. Here's Gazprom, the big one. And this one's just kind of holding in there. Didn't really spike and didn't really do much on the news. Gazprom, another one. Here's Synovus. This is a company that has a refinery in the middle of the USA. And it's also a Canadian company that has some oil sands work. And this stock has been basing for 2 years. And now what we're looking for is, can it get the momentum to break out to the upside? So as these stocks start to come into play, I think there's some good ideas here. Par Pacific Holdings, this one's been working higher anyway. It was at new 3-year highs, even while we were watching the rest of the oil stocks pull back. So that's a pretty good look. And then this one, Cosmos Energy, this one had a nice surge. Still trying to hold the range, but as you can see, it gapped up. So this would be the last Friday's close, gapped up on the open, pushed higher, and is now trading in the bottom of the bar. Well, that's not that bullish. It's still well up off the lows, 4.7%, or sorry, the close of last week, not the lows of last week. So with all of that, we're getting good price action on these, and it's just an important place to watch. So one of the things I like to say is there's no, when we say miner, fire, and oil together, those are never words that match up nicely. The one thing that's probably helping us right now with this whole Saudi blow up was that Saudi had already reduced production capacity by 2 million barrels a day. And they expect to have half of the facility, the big facility that can do up to 7 million barrels a day. They expect to have at least half of that up and running. So we have some production bottlenecking there that's going to take place over the next 6 weeks or 3 months. Now, Saudi thinks they can get it done relatively fast. I think the hardest part is trying to get new valves and stuff like that. Typically, for flow rates that high, you're probably going to need bigger valves that are not regularly in stock. So some of those things will be problematic over time. As an example, if you have a small pipeline leak, by the time you shut it in, get new pipe, get new valves, all that kind of stuff, a minor one can take 6 weeks. The pictures from Saudi Arabia don't look minor. The only good news is that with their Strategic Petroleum Reserve, the U.S. Petroleum Reserve, and the Chinese Petroleum Reserve, we're probably able to handle the shock, but it's definitely going to tighten inventory levels pretty substantially over the next period of time. So I'm not expecting the price of oil to weaken much. We still have the response in terms of who did it and what happens to that, and that might add to more geo instability. So with all of that geopolitical instability, with all of that going on, I don't think you want to leave this oil trade. I think we're just getting going here, and there's probably more upside to be had. Again, we were trying to get long a few weeks ago, and that just happened to be good timing. But here's Holly Frontier Corp. This one's starting to break out to the upside. Here's Tullow Oil PLC, and you can just see it's starting to turn up. So all of these things have crossed positively, and I'm more interested in the ones that have actually broken through some sort of a downward trend line and have started to turn up. In this case, price trying to break through to new 10-month highs. I think there's something there. CVR Energy, this one turning up again here and trying to bounce off zero. That's bullish. We saw the same thing back at the end of 2018, and it was a pretty good ramp up from 35 to 55. Here's Hess Corp, and this one really pushed up nicely. We could see it went all the way back to the late September highs of 2018. And you might remember that's when the stock market topped in there. So a lot of things rolled over at that particular time. So I do want to talk specifically to that stock market rollover and kind of where we're at right now. I want to talk a little bit about that on the indexes. So I would encourage you to go through and look at some of these oil companies. Some of these are big, beautiful moves on here. And again, starting to break downward trend lines. I like at least 4 or 5 months of momentum down, and you're starting to break out to the upside. That would be pretty bullish. So keep watching these oil names. I think there's lots in here that look pretty good. The ones that didn't have much of a response to it, I would probably, I don't want to say ignore, but I wouldn't put them on my top of the radar. I want something that actually jumped on the news, and then watch to see how much it pulls back, and if it gets any sort of up thrust at all, that would be beneficial. So a lot of the Canadian companies really had a good response to that. There's good ones in the US as well, but these Canadian ones that I've shown, like Suncor Energy, are listed on the US exchange, so people can buy those stocks. I do want to go on and just perhaps we'll break for a commercial break right away here. What I want to do is I want to go into this particular situation here with the indexes, where we're at right now and how it compares to 2007. And why we want to be at least aware of the similarities to the situation. So with that, we'll cut to a commercial and come back and stay with me for that. Okay, and we're back. And what I want to talk about now is the correlation between the 2007 market high and the current situation that we've got setting up here. So unfortunately, I can't quite get it all nicely on my page here. I've just put it into a Word document so I can compare the two time differences. But one of the things that we saw back in 2007 was, so we saw a big ramp up with a correction, pulling back, and then the market went on to make new highs in July, then fail, pull back, run up, barely make new highs for a week or so, and then pull back. So I've lined these up in the same months. And we've had a very similar situation set up here. Probably the only real difference is that the June-July setup was actually a month. It happened in May this year, and it happened in June that year. But we're seeing a lot of similarities to these big ramp ups. And then on the pullback, the one thing I will say is we aren't near as close to the 200-day moving average as we were back then. But we have a lot of other similarities in terms of, as we run up into October, we get this big thrust up on the PPO, or in terms of momentum. And just when it looks like everything's fine, this market kind of topped out and went down. And as you could see, it fell away quite quickly. And it wasn't really a very friendly response. So as we head into earnings season coming up here, I'm a lot uncomfortable with the price action here. One of the things I wanted to see was that we would keep flying right through. So now when I roll this out into the weekly charts, What I want to show here, I've done the same thing, tried to set up the period. So up at the top here is current, and at the bottom is what happened going into the '07 top. So I haven't shown you all of the big collapse over here on the right. But one of the things we saw was kind of a weakening in momentum, and as we came down, we dipped very close to zero and pulled down. We haven't really dipped that close to zero, but we're struggling to make big moves up here, and we're starting to see some things show up that are very bullish, like financials break out. Countries around the globe are starting to break out, like Canada, France, those kind of things. Sweden's very close. The US is very close. So we're starting to have the potential for a global thrust. Now, again, what happened in '07 was we all got up here and then we all fell down. Now, I'm not expecting the 60% decline or whatever. One of the concerns that leads me to this comparison is the last time the Fed started to change interest rates was in 2007. And in September, they did the cut mid-September, which we just went through. And then 3 weeks later, the stock market topped in early October. Well, we've actually had two cuts of a quarter point. And at the time, the Fed said, we see no reason for any further cutting. And back in 2007, they said the same thing. They didn't see any reason. And then by December, they were doing cuts. And then by January, they were doing an emergency cut. And then by the end of January, they were really starting to cut. And we didn't have a Bear Stearns failure until May 2008. So the perspective that I want to put on it is, just because the Fed doesn't think there's any more interest rate cuts doesn't mean there won't be any more interest rate cuts. That's what the Fed always says, is they think this is a relatively small pullback, and they sure don't want to raise fears like we think this is a big pullback. So take those tender words to heart that, we don't think there's any reason for another pullback, but there was a lot of dissension on this rate change right now. The one perspective I would just say is we're heading into earnings. Earnings are expected to slow. But on the contrary side of that is the Citigroup surprise index has started to accelerate upwards again. And so perhaps this is going to turn and head up, and that's what my charts are still showing me, but I'm a little bit leery here. So I wanted to just make everybody aware, because as we head into October in this earnings period, I think we got some work to do. Today is quadruple witching, which tends to be a very high volume day, and it also tends to be, it can mark some major points. Like you might remember the end of September last year, we made market highs right around quadruple witching, and then we kind of floated around for a week, and then we really broke down hard. So all those things are in play, and I just think we should be aware of them. Now, I do want to go to one other area here and discuss, just go back here to Safari. And the one thing I want to talk about in general is these advanced decline lines. And one of the things that we're starting to see, I really was bullish because of this. One of the reasons I was bullish was because this giant thrust was as big as the sort of thrust we saw off the 2019, 2018 lows, and we had lots going on. One of the concerns I have is that this has really pulled back a lot farther than we saw in here. This thrust was kind of maintained. And we saw this sort of spike in March of this year, or of last year. And what happened was we had a sudden spike and quite a big drop, and it dropped all the way back down to recheck the prior low. And then we rallied out of there. So I'm a little surprised at the size of this kind of retracement. I thought we had more momentum than that. And so it does make me wonder if we're kind of near a spike towards the end of the rally here. So get everybody in and then take it out. We still haven't had much thrust in terms of the high-low arrangement. I want to start to see, these sorts of huge piles, not these little piles that barely get going. And so we're still trapped in this range of not a lot of net new highs. Now, if we broke out to new highs, obviously that would help on the NASDAQ. So we aren't quite there yet. And for the New York Composite, what we see is this thrust is holding up better, which is helpful. That's kind of the thing I was envisioning. And the advanced decline line is hitting new highs again today, which is bullish. So that's all good. So these things are presenting some opportunities for comfort, but as well, we want to see these thrusts keep going. So the New York composite looks better than the NASDAQ composite. Let me just go back to the NASDAQ charts for a second. And what I want to show on this particular chart here is back in 2016. Let's just unwind the tape here for a little bit. Back in 2016, everything surged off the lows. But one of the things that happened is the NASDAQ actually underperformed. So while oil and financials were rallying here, the NASDAQ underperformed and didn't start to turn around until July. And so one of the perspectives I had is perhaps we're seeing that same thing where the NASDAQ actually doesn't perform that well over the next 3 to 6 months as money moves into, as we see from the New York Stock Exchange, into the oils and the financials rather than the technology. And then, once we kind of get on stable ground again, then we'll have the technology sector take out those prior highs and get going. So I'm comparing all of that, and I'm trying to, just keep some perspective on it as to which way we're leaning. But right now, I want to see next week, I want to see some more advanced decline line improvements, and I want to continue to see the breadth expand in the market. So those are some issues that are starting to show up for me. Okay. Lastly, the one thing I do want to show is the solar stocks are really starting to shine here, and with the thrust this week. So these are up 8% this week. This is the ETF for solar stocks, and it's really pushing higher. It's been on a good run already, and it looks like it's set to continue. Looking at SunPower, this stock was consolidating for about the last month, and now just put in a huge candle this week, up 20%. And it's breaking out above a 2-month or a 2-year base, kind of broke out, came back to test the breakout level, and is now starting to head higher. So that looks pretty nice. Vivint Solar, this one has been consolidating for 3 or 4 months. If it could start to turn up here, that would be bullish. Here's Plug Power starting to take off to the upside. And on this bounce, I think this is a very bullish place for it to bounce, come back, hit the zero line, turn around, and start to head higher. So I like this one here, and it wouldn't take much, get it above $3, and all of a sudden you're at new 4-year highs. So that's kind of a big deal. Here's First Solar, obviously one of the big stocks in the arena, and you're seeing this try to push to new highs here. It wouldn't take much to get above 69.24. We're trading at 67. We're up 5% on the week. So a breakout here would be new 52-week highs again in that area, and having the PPO turn up well above zero is just bullish. So want to keep watching it. This one is a Canadian company, an electrical utility with some renewables, and it's doing very, very well. Sunrun, the stock had a big move this week, up 10%, breaking back above its 10-week. Full stochastic, just turning on a buy signal here and bouncing off the zero level. Again, another bullish place to expect more results to the upside. Interjex Renewables, another Canadian listing. This one's been consolidating for 3 or 4 months here, so watching that one to see if it can start turning up as well. Vestas Wind Systems, we all know the windmill company, pulling back to the zero level, and looks like it wants to start to turn and go higher. We're seeing the full stochastic kick in. So I like that chart. They're all starting to look pretty good. Here's another Canadian one, Northland Power, and you can see it's bouncing off the 40-week moving average. Hasn't turned up yet, but we'll keep watching. Solar Edge, this one has been moving up nicely. Look at the move it had to start August, kicked up, consolidated for 5 weeks, and bouncing off the 50-day or the 10-week moving average. Trying to break out to new highs this week, up 15.28%. Big number here. Relative strength is hitting all-time highs. So lots to like on this stock, and I think there's more room to the upside there. Rena Solar, this one, it's just such a big downtrend, and all the other charts look so good. I like them. This volume and this surge makes you think something is changing there, but I think I'd let somebody else own it for a while. Ocean Power Technologies, just not much to look at there. Jinko Solar, this one's been consolidating all year. Can it finally start to turn higher? That would be a good question. Canadian Solar, CSIQ, consolidating for the same, much like Jinko Solar. Want to see this start to turn up again. All of these names, it broke out through to a new 2 or 3 year high and then has done nothing. So we need to see it start to turn back up again. And it didn't bounce on the news this week, which is probably a little bit unfortunate. Real Good Solar, nothing really good about that chart as it's down 9% this week and trading at 13 cents. So that's probably not it. DACL, this one's been trending up nicely and just looks to keep going here, up 5% on the week. So another nice name. China Recycling, I don't think we want to look at that one. Yingli Green Energy Holdings. So these ones that don't have scooter rankings, I've just ranked them by volume. Again, this thing's terrible, so we'll stay out of that one. New Energy Technologies, this one, trying to get through this $3 level. This line's been on the chart for a long time, but a bounce right here would be helpful. I'd still play the stronger ones. STR Holdings, I don't like the price action there, and that's kind of a brief look at some of the renewables. So if there's a trend here, I think all of a sudden energy is coming back into favor, and whether it's solar or oil, I still think we've got some more upside on the oil names. If the global market starts to roll over here, one concern that really showed up for me this week was the Shanghai market didn't do that well. It kind of dropped down one day this week and is just holding in here. I really want to see it get through this prior high. So that's a concern right here. If it could start to take that out, I think that would help. So that's in focus this week, just to see what goes on there. And the chart for India won't update, but they did some tax reductions for corporations, and they had a big 5% move on their index today. So again, that helps. EEM is a way to watch these kind of nations. And what we saw here was back above the 40-week, but we still have these declining highs that we have to get through. And if we're going to break out to the upside here, I think, watch EEM, Shanghai, Brazil, some of these other markets, and just see if they can actually make the turn. And if we stall here, that leads me more towards the original stuff that I talked about there with the price action compared to 07 and this declining peak here in the advanced decline line, much like we saw in 2014, 2015. And it tried to get going here. And then, like, to me, because I've changed this slope on this line, or changed it, the slope changed. But one of the points I want to make here is if we got through this prior high, that's good. You can see over here in 2015, we kind of struggled as the market topped and then we fell down. So there's some things that make me very bullish here, but I'm also struggling with the fact that we stalled here on the advanced decline line, and we're at quadruple witching, and the Fed is still dropping interest rates, promising that, no more damage to be ensued. And then, these are movies we've seen before. So it's hardly the time to kind of vote for clarity that everything's just free running here. But I will say that it looks to me like all of the stuff wants to start moving higher. It's really important to keep watching it over the next 2 weeks, just to make sure that we don't start to fall into this market rolling over right at prior highs. That would be a big problem. So thank you for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. And lastly, one more reminder. I am speaking at the Toronto Money Show tomorrow at 3 p.m. And if you can join me there, that would be wonderful. Thanks, everybody.